the thesis of putting gold into games and gold into the internet to start a digital gold rush is exciting.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Michael, thank you so much for joining me today. Super excited to chat with you. All right, Michael, you're the founder and CEO of GDA Capital. GDA Capital is a full-stack digital asset firm that combines advisory, investing, and venture building. Previously, you founded the blockchain advisory firm MLG back in 2016. And before that, you were actually involved in media, including being a technical writer for Bitcoin Mag back in 2016. All right, so Michael, take me all the way back to your beginning or early interest in crypto, or probably Bitcoin, I would assume. When did that start? Because being a writer for Bitcoin Mag in 2016 is crazy.
I actually got involved quite a bit before then. I went down the rabbit hole in 2010 or 11. The Wired article, Bitcoin has gone to $30, and Wired, I was fortunate to see that article. I was in first year university at the time, and I was familiar with Bitcoin the year before at less than a penny. Thought it was a scam. Didn't take it seriously. I just knew there was this asset class called Bitcoin, and then lo and behold, a year later, it went up like 30,000% or 300,000% to be worth $30. That piqued my interest, had me go down the rabbit hole, consumed all the information that was possible to consume at the time, which was not a lot, and decided over the next couple of years that it is the most exciting technology in the history of the world, and wanted to go all in, tell anyone who had listened about it. So I actually got involved by starting the cryptocurrency club at McGill, where I was going to university. I started the FinTech Society at McGill. So it was like 2013, 14. Started Bitcoin Canada, I think in 2015, 14, started doing national events in Canada, took on a board to the Bitcoin Association of Canada. And then, connected with David and started doing some articles with Bitcoin Magazine.
That's amazing. Wow. Okay. So, all right. So you were very deeply involved. That was not your first exposure back in 16. It was actually 2010, 2011, we'll call it?
2011 is when I went down the rabbit hole and just started to track it. I watched it go from $30 to $1,200, thinking that I had missed the boat. And I read The Intelligent Investor previously: buy low, sell high, not after an asset has just gone up 3,000% or 30,000% or whatever the increase from less than a penny to $30 is. So I didn't participate. I watched it go up. I started buying on the way down. So the first Bitcoin that I bought was at 500. On the way down from 1,200, I think that was like 2014 or 15. And then I went all in at like 300 at the bottom of that market, like after it collapsed from 1,200. I lost and gave away all those Bitcoins though. So
that's awesome. Wow. Very cool. Okay. So at what stage did you decide to launch MLG? Because a blockchain advisory firm, back in 16, 17, like that was still like, what even is blockchain? Like what are you doing with that?
So my thesis the whole time has just been, this is the most exciting technology in the history of the world. The world needs to know about it. So I want to just contribute to creating adoption and network effects. And the way that I've gone about doing that has changed as I've gotten more exposure to the market and I've gotten older, because I started with this stuff when I was 18 years old. So I've really, really grown up with it. But while I was in school, I was doing a lot of education, a lot of setting up businesses. Actually, the first real business that I started in the space was a company called Accept BT that was BitPay in Canada. I started setting up dozens of merchants to accept Bitcoin using this payment processor. And I would take people on what I called bit crawls to go through all these merchants. Problem is that no one used Bitcoin. This was like 2014, 15. No one used Bitcoin unless I gave it to them. And then I would get cash back and do it again. But I lost the early Bitcoins I got to the human error. So I shelved that business. I needed to generate some revenue because no one used the payment processor. Like, and for Bitcoin, unless I gave them Bitcoin to use, is really just like a novelty proof of concept. And the merchants would humor me. It's like bars and restaurants primarily that I was onboarding back then. But yeah, while I was in university, I did a lot of hackathon startup competitions. I taught myself software, and started doing national, international events with the Blockchain Education Network. This initially started with a small network of IBs that connected the Canadian collegiate ecosystem. We expanded internationally. Now it touches quite a lot of like hundreds of universities, blockchain clubs. But yeah, I was doing a lot of building, and I at the time also white papers were more important and different, and so I was familiar with a lot of the stuff that was going on. I was writing software at the time, and needed to generate a buck, and realized there was no one that had anything on the internet for anything at the time. So I just branded myself as I graduated. I was trying to just stay in business at the time. I didn't have any money. Yeah, figured that the best way to onboard users to blockchains was to help enterprises understand and adopt blockchain technology and onboard millions of users with one enterprise or government handshake. So that's where I wanted to focus. It's where I thought I could add the most value to the market. And yeah, it was a good experience with banks and governments, which is where I found the most traction in 2016, which was cool actually, because shortly after I first started it, which at the beginning the objective was just to rank on Google. I realized, and I ended up trying number one on Google for all these cool search terms like blockchain consulting and Bitcoin consulting and Ethereum development, Ethereum consulting, blockchain development, etc., enterprise blockchain development, stuff like that. I started to get a lot of views from that, but it was in 2016 that there's the first interest from banks to want to have blockchain teams and build out proprietary blockchain stuff and understand it. And so yeah, that was my first business. And why I got into it is just was trying to make a buck and create some value. And I thought enterprises was the best way to create more value at scale, because you could onboard millions of users with one handshake. Realize in the end that they're actually really slow to move. So faster to not do that. But yeah, you learn.
Awesome. Okay, so tell me about GDA Capital. At what stage do you decide, okay, MLG, I'm going to kind of evolve this into GDA, or like what was the connection between MLG and GDA?
Yeah, so in 2017, the beginning of token offerings, I was not super excited about or inspired working with enterprises, banks, governments that I was helping out with understanding and adoption and positioning and stuff in 2016. Because they were super slow to actually release applications. Like the banks need to have eight-figure at least marketing budgets to onboard millions of users to applications. And in 2016, you just couldn't release blockchain applications. Like the network didn't scale to millions of users. It didn't make economic sense to spend tens of millions of dollars to market early stage projects. You could only have like 10,000 users, because of the scaling issues. So you couldn't, so they were just doing testing and development. They weren't actually taking things to market. So they struggled with keeping staff, but it was the beginning of token offerings in 2017. Beforehand, it was all like, there was just like 10 to 20 tokens. What you got involved in 2017, if I remember correctly?
17.
Yeah. So that was the beginning of token offerings. 2012, there was like 10 coins. Many, and they all had to be their own network. There couldn't be any like token on a protocol. So yeah, I got into that boom in 2017, contributing to token offerings. I was interestingly positioned, I would say, because I had been creating this international collegiate network, blockchain collegiate network, when I was in university. At the time, a lot of the innovation was happening on campuses, and the founders of this collegiate network, like of each club around the world, started to graduate and start businesses or start working at some of the big companies in the market, which at the time was non-existent. So I had pretty good connectivity globally to blockchains because of this as a recent graduate. And then from from growing up in Toronto and going to McGill, my friends from university or growing up started to work at enterprises, or I started to have connectivity to enterprises, started to have experience working with enterprises and or with the capital market. So the thesis for tokens basically is create network effects, onboard lots of users for whatever niche it is you're trying to create an edge for, raise capital on the story, onboard enterprises that want to access the network, raise capital in the story, onboard more users, access more enterprise utility, and raise more capital. So that was kind of my thesis in 2017. And so I stopped focusing on enterprise, and government started to focus on token offerings. And Tron was my first. It was my first smash success. I was the first person that Tron brought on outside of China when they delisted from Chinese exchanges and had to give their capital back to Chinese investors. And as part of my work with Tron, I brought on a private equity, merchant banking, family office individual from Toronto. I'd built a relationship with that contributed to our work and deal structuring and stuff. And that positioning is how we continue to approach the market. Whereas MLG, the initial go-to-market was enterprise consulting and development, and their focus shifted to merchant banking, private equity, venture building. Then we set that up in 2019 with Secure Digital Markets, Zach and Dave, when we did deal with those guys.
All right. So can you tell me, because I know GDA has kind of 4 verticals. One is capital markets advisory, which I think is kind of what you're talking about right now. Number 2 is venture incubation and acceleration. 3 is digital asset investments. 4 is innovation, events, ecosystem development. All right. So can you kind of take me through the evolution of GDA, where it sounds like you started with number 1, which is this merchant banking type of activity, capital markets advisory, and tell me, like, how has that evolved from where it was the early days, 17, 18, till today?
Yeah, I guess you could say we actually started with 4 because we've been doing the community ecosystem innovation stuff since university. We just kind of continued to commercialize it with GDA, and then instead of just doing it for ourselves to get experience in the market and to help businesses connect with students, now it's more of a way for our portfolio companies to connect with academic institutions, to connect builders to protocols. So now it's more developed. Still, I guess it's ecosystem building, but I'd say we actually started with that in university, then started with the advisory work when we were first starting, because we're all prop capital. As we did well in the market 2 cycles ago, like the beginning of the ICO boom, I had graduated and started to have some hits. Then we started to reinvest our profits into principal investments. So got into that business niche, and then the incubation acceleration niche started, I guess you could say, in 2018 as well, like 2 cycles ago, but more so last cycle, when we realized that we've got lots of experience building businesses, good network to contribute to building businesses. We at some certain times, and we have our ear on the ground for innovation. Certain times you can find an edge, like a market niche that you think you can be a first mover in. So yeah, I like to try to identify new technology waves that I think could be massive, and find it's good for us to have a joint venture partner, because that fits in some other, because we've got a lot of stuff going on. If we think we have an edge in a new market that we can be first movers in, and without spending a ton, have a business that at least ranks on Google for it, and we can kind of watch the market and see how the narrative develops over time, and continue to invest into the business if and when it makes sense. But I think the there is definitely value in investments and advisory as a way to spend time and use of capital, like to generate returns on capital. But owning businesses is the best, can be the best and the most high risk investment time. But I think also part of our, part of our advisory edge, I would say, is that we are not just investors or quote unquote advisors. Like, a lot of people haven't actually been in the trenches and started businesses and exited businesses. Even a lot of investors, they're looking at and doing investment due diligence based purely from a VC lens, which is cool. Certainly adds value. But so anyways, we want to get our hands dirty, and if we think we have an edge, actually start businesses. So that would have been probably 2018 that we started with that, and more last cycle that we started to do it seriously, as we started to realize that operating businesses is definitely with risk, but provides outsized returns and ensures trust and relationships if you're operating the business, etc.
All right. So would you say the rough flow is you use the advisory business to kind of stay active, get cash flow, see who's building what's exciting. And then in addition to that, you're also investing in the deals, whether it be in that similar ecosystem that you're advising on, or whether it be something totally separate, that's also keeping you active in the market. And where you're seeing something that's really promising, and I'd love an actual example after this, but where you're seeing a sector or an area that's really promising, then you'll go decide, hey, we're going to actually incubate or launch our own business within this specific sector, vertical, et cetera. Is that, and then the events kind of is for supporting the existing portfolio and also just like the ecosystem broadly?
So again, I would say the ecosystem, the work from university got our experience, network, exposure to the market enough to start to be able to have value to add to businesses in an advisory capacity as a 22-year-old. When I started getting into blockchain advisory, didn't have like venture capital or private equity experience. I was just doing blockchain businesses my whole professional career pretty much. So yeah, ecosystem got into advisory generated some revenue, started doing principal investments, and then realized that the best thing we can be investing into, if we think we have an edge, is ourselves, build real businesses, and time, limited time. So, but yeah, in general, you're accurate.
Can you walk me through an example of how you ideated a actual company that you decided to build?
Yeah. So when we got in touch, actually, was because of Metaverse Group. So my business partner for Metaverse Group was one of the first NFT collectors in Canada. One of his business partners, actually, has got to be the first NFT collector in Canada, has a wacky portfolio of really OG NFT stuff that I thought was strange at the beginning. Didn't understand it. This was like CryptoKitties time and following. I think NFTs got big. It would have been like 2020, 21. So he's been collecting 2018, 2019. He had a bunch of wacky crypto collectibles. Didn't understand it. Jason, my business partner, described NFTs to me tied to land and with the metaverse. Okay, cool. NFTs is a way to bring anything physical into the metaverse. There's going to be commerce in the metaverse. Everyone's going to do commerce in the metaverse, just a question of when. All physical assets will be sold in the metaverse. For them to be sold, they need to be NFTs. Duh, makes perfect sense. Okay, how do we get it? And no one's thinking about the NFTs or metaverse market. This is like 2019, or 2018. So initially, I set on a bunch of domain names. So I own the domain name, for example, nft.capital, nft.ventures, which I didn't end up doing anything with. I'm just thinking, how do we get into this market? And we intended to do, collectibles at the time was super hot. So we started a business, which didn't end up working. Rare Store with a partner that had an edge on the graphic design and origination for music, viral NFTs to release. And then land was really the narrative that I thought was higher edge, because if you have collectibles, you still will need land to build and to like have your collectibles for sale in the metaverse. if you have marquee lands, then you can always get into the collectible business later on by having, I say collectible broadly, it could be any item, it could be gold, it could be a fridge, could be, a Bored Ape, any item could be a collectible technically in the metaverse. But we started accumulating metaverse land. We were first movers, one of the first people to do that at kind of enterprise scale. And we're first movers starting a business, Metaverse Group, for metaverse real estate and metaverse construction. And we didn't really have a business model defined because there was no business in the metaverse. Just same thing with NFTs. The way that I think about markets is, let me get a domain like NFT.capital, NFT.ventures that's broad, that can give me positioning in the market if I want to be in the market. And if I'm first mover in the market, then, for example, with Metaverse Group, we started to create content, shared our portfolio. Then the started to rank number one on Google for a bunch of key search terms. So that when the metaverse narrative became hot, started to get and the metaverse narrative in general started to get hundreds of millions of impressions. We started to get a ton of visibility, and a ton of enterprise companies started to reach out to us. So that's a good example of like being early in a trend or a niche that we think is big enough that it's worth our time, and that we can position in that market reasonably low cost, with a business that is vanilla-ish, but enterprise focused, institutionally, like looking institutional as a counterparty, so we can do business with big companies, and then just wait for the market to grow if it does.
Is there, in the businesses that you're incubating and launching yourselves, is there like a theme or a thread that you can track to say, oh, actually, I didn't realize this, but all these businesses that we're launching all follow this general path or trail or target market, et cetera? Or is it kind of like, hey, we don't really know, there's no theme, it's we see an exciting market and we want to move quickly and get involved?
Yeah, good question. And I'd be keen to hear some of these answers for yourself as well, but that's a different story. So last cycle, when we first started to invest pretty seriously, or 2 cycles ago, it was more sporadic. Like I just wanted to have a horse in each market segment. So I would think about, for example, DeFi as DeFi, and I want one portfolio company in DeFi, and I want one SocialFi company, and I want one GameFi portfolio company. But the market's really basically, and I didn't think about constructing a portfolio that was necessarily that the DeFi company is working with the SocialFi company. As an afterthought, I would potentially want to be helpful in setting up relationships there, but I wasn't like architecting the portfolio thoughtfully to be cohesive. Now I definitely am. I'm really not looking for more deals that is either something that doesn't fit with the ecosystem architecting, or is in a market that I don't understand or don't want to spend the time to understand. Might be the case that I want to understand the market, so we'll try. But the way that I've this I don't know if it's simple, but the way that I've been thinking about my ecosystem construction now, I think Web 4 is a good way to embody it, which I think is building network states on top of the Web 3 networks that we have today, as in organized communities that have AI natively integrated into these communities in immersive worlds. So yeah, I think the cohesion of disruptive technologies and with this Web 4 network states in worlds with AI native worldview that I think is we're super early in now. Like I think that a lot of people would disagree about where they think the web is going, but I think that we're starting to architect. We've now been building Web 3 for 15 years. It's about this amount of time that the internet goes through a new metamorphosis, and However it is, and people can have their own theses, I think that by next year, this thesis of Web4 and the cohesion of narratives is going to become increasingly apparent. And
Okay, I definitely want to dig deeper into Web4 because that sounds super interesting. But all right, so but going back a little bit to the venture incubation and launching your own companies, at what stage or at what point do you decide, hey, we want to launch a company within this vertical, or we want to actually make an investment in this vertical? Like how is that? And are you spending most of your time on the companies that you guys are launching, the venture incubation, or are you spending most of your time on the investing side?
so where we've spent more time has changed as the market has evolved, as we've evolved based on how much time we have, how much liquidity we have, where we think we see value in our time and capital today. So anyways, it's changed quite a lot. Now I think so. We have been building businesses for the past few years now. That now we've got a few that are. I think we have a lot of opportunity with. That is our primary focus. So the operating company, and then deploying more. So if there's and we have certainly done some deals this year, but where to spend time and focus now is on the building, and then deploying if there's a company that fits that we want to be, then potentially capital as a lubricant to a deal is how I'm thinking about investments now. I'm not just trying to do venture capital deals and be hands off. I want, again, architecting an ecosystem that I want to be complementary. So that's with the time. And then how do we think about starting or investing? So some markets you don't have an edge. Some markets you're late to. Like if you're late and you don't have an edge, then starting a business is going to be real tough. So the businesses that I like are in markets where businesses that I like to start, to be specific, are in markets that are not exploded yet, or in markets that are exploded if you have an edge. But let's assume you don't have an edge. In new markets where there's not a lot of people talking about it, where you can position yourself in the market very quickly and cheaply, and show up number one on Google for the key search terms that you think are going to be increasingly hot, and wait for the market to catch up. So kind of low risk, high upside stuff. And then as the market catches up and you see more opportunity, then invest more time and resources into it. But that's the build. We've also done some acquisitions. So if there's a business that we think we can add value to and grow, then that would also be that's more a special situation, I guess. And then to invest, if you're not early, if you think that other operators have a story, a narrative that is at a point that is likely to provide you a good return on investment. Like I was mentioning previously, I'm increasingly wanting to tie investments now to integrations and to as a deal sweetener. So strategic situations like that also is interesting, and as a way to build value to your portfolio, as opposed to trying to maximize value on any single deal per se.
The companies that you're incubating and launching, the operating companies, is your intention with all of them to just generate lots of cash flow? Is it to eventually go public? Is it to launch tokens for each one of these companies? What is kind of the monetization objectives for each one of these operating companies, or does it vary?
Yeah, all of the above. Have experience, obviously, lots of experience in the blockchain market. Have a fair amount of experience in the public market, and operating businesses that have no tokens. So yeah, really situation dependent.
Very cool. Okay, so also you mentioned previously that you guys were prop capital completely. What was the decision in deciding to be prop and stay prop? Because I assume you could probably raise capital now.
So we started prop because I started this when I was 25 years old and did well in the market 2 cycles ago. But I just started to invest, continued to made money advising and continued to invest, and was doing community building stuff because I just am passionate about blockchains and I want to tell anyone who would listen. So I just want to be helpful. So that kind of comes easily. And the building businesses, I've been building businesses my whole life, but it has just kind of come as a culmination of theses that the best way to use our experience in the market is and the best return on investment is to invest into yourself.
Well, it's just that you're prop capital, and I just assume you could, especially now, decide to raise.
Yes. So started with prop because that was the only option. We actually did create an asset management business and raised. We had 3 funds in last cycle. We did a joint venture with a Monaco family office, ex trader of 9 figures or 10 figures of capital. That was going. It was two market neutral strategies and one index. And the market neutral strategies were really the edge. Index wasn't really an exciting product. And they were going well until there's 2 months they did something they did very poorly. But market neutral strategies need to stay market neutral. And so we returned the funds to investors, and we're open to strategies to roll in, but we haven't settled on one yet.
From an ROI perspective, which one of these 4 verticals, the advisory, incubation, the investments, to the events, which one has, I guess, been the best performer in terms of ROI? And also, I assume it varies based on the timing, but broadly speaking, which one is the primary moneymaker?
Yeah, year over year changes. Events for us is a lost lead. We're not trying to really make money from events. We're just trying to build the ecosystem and to connect people and to generate revenue from advisory investments in our businesses. Probably pretty equal, I would say. It's tough to, probably pretty equal. And then it depends on how you a lot of the advisory work that we'll do is for stuff like options, where it is purchased. So then whether that's a principal investment or whether it's advisory also is a little bit cloudy.
Cool. Okay. So going back to the companies that you're launching, there was something that you're launching called Flashy Finance. And take me through, first of all, what is it? And then explain what was the thought process of launching this product?
Yeah, so the high level thesis is we're building a digital civilization by bringing gaming, social, DeFi, or gaming, social finance, sports, entertainment, etc., into a single cohesive ecosystem, all on a blockchain protocol. How it came together is that we had a opportunity to acquire a non-custodial decentralized finance wallet called Life Crypto. We rebranded to Life DeFi in January 2023. Similar to a MetaMask or Crypto.com or Trust Wallet. That I thought the plan was to have become a retail play for us, because outside of that, everything we do is pretty institutional. We don't have a retail product that people can get access to our deals or whatever. So the intention was to integrate our lending business and create adoption of this wallet, and we'll airdrop incentives from our portfolio as they launch as a reward, etc. I still like that business, but there's lots of wallets. It's pretty competitive now. So as opposed to just looking to, and we're raising some capital for it, but yeah, we're primarily financing this ourselves. And I thought that just looking to acquire users competing with Crypto.com or MetaMask or Trust would be super expensive, it would be very difficult to compete with them directly. So the thesis became that there's there's a number of games, social networks, and other businesses in our portfolio and ecosystem with lots of users that need or not that could have decentralized finance, because you play these games, you earn a few bucks, you in SocialFi, you watch videos, or you engage in the network, you earn a few dollars. You might as well be able to lend, borrow, on and off ramp, stake, swap, access decentralized finance functionality natively from the cultural application. So, but seed stage games or social networks don't have the resources or time. Better for them to grow their user base than to build out banking functionality, right? So I started to do deals with primarily games and social is where I found product market fit, with lots of users and with a low cost of customer acquisition, for me to layer in decentralized finance so that the user that's earned $5 playing games or watching videos can trade with it. So I thought that was a great go to market, because I don't think anyone's doing that. And games and social, I think, is the frontier of banking. I don't think Gen Z or Gen Alpha are going to set up banks at JP Morgan unless the family does it for them. They're going to play games, watch videos, and engage in the websites they're already engaging with, and then be able to trade natively. But the challenge with that go to market is that early stage businesses are high risk. So there's risk that I invest into an integration that they say, thank you, we're going to go. We realize this is a good idea. We're going to integrate it ourselves, or we're going to work with another provider. Or so how do we ensure that it's sticky? And or a early stage game or social network could just go to business. So you invest into an integration, and then they don't continue to operate. So determine that a better go to market actually is to acquire these games and social networks, so that our business becomes the financial rails from Flash. We merge Flashy, we merge Life, the decentralized finance business, with Flashy Cash, and then rebranded it to Flashy Finance. So we have the financial rails from Flashy Finance. We might as well, instead of just powering other applications, which we are open to doing if it makes sense as a service, let's also own the rails and the distribution and the banks in this case, and let's turn the games and the social into banks. So that's the thesis with Flashy Finance.
It sounds a bit like Coinbase's base and like base ecosystem. Is that kind of an appropriate analogy?
Yeah. So Coinbase, what they're doing with Base, they is more recent, but yeah, super validating for the thesis. We're early, like this whole culture idea of culture-fi, bringing finance into culture, is still super early. What I expect to happen is that a Coinbase does an acquisition one day of a Halo or of a GTA, because there's tens of millions of users of Halo. Users play, and GTA, I think people are going to be able to earn crypto. You might as well, with your crypto, be able to walk into a bank in GTA and be able to lend, borrow, deposit, access investment products natively from the game. So I bet Coinbase does a massive flagship acquisition like that, which further validates our thesis. We're playing in the lower and middle market. We have far from the scale to acquire a Halo today, but we can acquire a dozen games that have 500,000, 1 million users, and put the portfolio together so that it's cohesive and in aggregate have the value of the user base of a Halo, ideally.
Very cool. All right. So I want to move over to the investing side. All right. So tell me about your investing process. Just when do you decide to make an investment? How are you sourcing these investments? Are you looking at token deals only? You're looking at equity? We can kind of go through your whole investing process.
Yeah. So as far as structure, we've done tokens, private and public. We've done private equity, public equity, LP investments, SAFs, safes. We've done pretty much everything. We're pretty flexible because we're prop capital, so we don't have we can also change up our structure over time, and as we get experience and see opportunities. Probably preference now, and also there's different edges, and as I'm sure you're you're aware, sometimes there's more opportunity in the public market, sometimes there's more opportunity in the private market, etc. Tokens in general, we're super crypto native, and we certainly want tokens, but I definitely want to play on the equity and token side of the equation. I think it was a little bit foolish actually as investors over years to have disregarded equity and investments. It's almost a little bit shameful, I think, in hindsight, because we're taking on so much risk, and then and obviously in certain cases token founders do create honest networks and give back, but a lot of the it's percentage of the time they don't, and they extract the value from the token at the expense of the community and investors. They keep all the value in the equity, which they control. So there's, I think, challenges on that with the incentive layers of equity or tokens. So I think a dual model should be expected by investors now, and I think should be always on the table. Like this idea that a lot of issuers have now of saying that they want to not sell the equity to investors. Like, how does your company desirable enough that you can raise capital, keep 100% of the pie? Like the math is not really making sense there, and the perspective of founders, I think, needs to change. Certainly do. So historically, our business has been primarily pre-seed and seed, private sales, private market, and then we've done creatively public or opportunistically public or purely private equity or public equity or LP investments. Yeah, where we like to invest. The reason why I like to play pre-seed and seed, we've done up to Series A, but at that point, the businesses are usually pretty big. It's very difficult to add value above capital. It requires a lot of clockwork to do that. Whereas pre-seed, seed stage businesses, with a couple key introductions, you can tip a pre-seed, seed stage business. So if they're well positioned in your ecosystem, and you have other businesses that fit with what they're doing, and you think you can bring all of it together, the pre-seed seed stage, a couple key introductions, model's proven, and it can start to tip. So that's where we want to play.
Are you actively trying to go out and source deals, or are these just inbounds coming to you or through your network?
Mostly inbound. Do I actively look to source deals? I guess you could say so, but I have too many deals to even look at. So actively sourcing as a challenge is challenging to consider. I don't need to try so much to get deals. The thing that is more important to try is hot companies that don't need capital, but that might be helpful to a portfolio, are hot to be sourcing. But I do source deals. I do make an effort to try, but I would say more so have made an effort over years to position myself to have deal flow.
And when you find something that you like, or maybe like, what is your diligence process? And because there's no investment committee, I would imagine. I mean, maybe just you and your partners that are deciding, hey, we got the team, great product idea and huge market, we should make the investment, or is there kind of a more rigorous process? Because if you're being prop capital, you can kind of have a leeway to decide what you want to do.
Yeah, exactly. So I see it's me and partners has also changed over the years for sure. I took a lot more that people told me at face value years ago. Now I have way more perspective of wanting to be shown stuff that people say. We have certainly done investments in 24 hours if there's a reason for that, or if we think there's an opportunity. So we can have the flexibility to move fast. Also with deals we've known for a long time, that's easy. And to my previous point, I was going to say, but in general, we used to be a lot more open to moving fast. And I think the market was also just a lot more open to moving fast. Like 21, 22, a lot of deals were closing fast. So if you didn't participate, the deal was done. Whereas today, venture is still pretty tough. There's not moon returns. There's still a lot of bullshit. And you've been in the market for long enough, then you know that while it might be true, what everyone's saying, it also might not. And so we take a lot more of a wait and see approach today. We want to see founders execute on what they say they're going to do. That they execute on what they say they're going to do. And I think that's pretty reflective in the market overall. Again, we can to hear your perspective, but we can continue your questions.
Yeah. So how are you managing this operationally? Like, do you have different partners that are focused on different verticals, or is it just, because I imagine you're spread, maybe, I don't know, maybe you're focused on one specific vertical mostly, or you're spread about, and then there's other people that are leading, the different 4 verticals.
Yeah, that's how it has developed into over time, that each partner kind of gets a niche for themselves. And instead of thinking of the market as this is DeFi, this is GameFi, this is SocialFi, now we'll think about the DeFi market is lending, borrowing, stables, payments, etc. We'll think about each market segment as a market in itself, and want to be, again, architecting complementary and synergistic ecosystems inside each one of these categories that we think we have an edge in.
All right. So if you have to kind of paint a picture for us 10 years from now, where's GDA Capital? Like, what are you guys doing, and how large, and what activities are you guys involved with?
I'd love to be a Web3 A16Z or public middle market galaxy would be cool. But yeah, A16Z I would say is Web 2 fully native VC fund started by kids that did well in the internet and built an empire. We're far from A16Z scale, but aspirationally, I'd love to see us with an ecosystem of funds that we can seed ourselves, focused on arbitrary niches. Or a middle market galaxy.
Very cool. Very cool. All right. So you mentioned Web 4, and I don't know, that to me, I'm just kind of guessing here, but is that more of like the 3D web with augmented reality and virtual reality and, more immersive, or how do you define like what Web 4 is?
Yeah. So I had this idea actually of the term of Web 4 to describe this, the integration of the ecosystem that I'm putting together as a way to simply describe it without needing to explain everything, without them understanding everything. It's not the objective for them to not understand everything, but you can kind of get it without needing to explain everything. And then I looked up on Google. I need to write an article about it, but I looked up on Google, and a few months before I had this idea for how to describe stuff, which would have been like May of this year, approximately 6 months, a year before. And there have been a couple articles that have been written about Web 4 that are similar to my thesis with it, which is great. And we are still super early. I think we're in like 2008 with Web3. And actually, interestingly, I think I mentioned previously that this is about 15 years that the internet goes through a new shift that is different enough that it's worth it to have a new word. But I previously thought about the idea of the next layer of the internet being purely spatial, which is what you were talking about with the metaverse, which is certainly a component of it, the spatial layer. But I think that now I spent a lot more time thinking about it. I think really it's the convergence of disruptive technologies and into the civilization layer. So instead of being networks, be states, civilizations, and be spatially native, AI agent native, and structured as states instead of as broad networks.
Yeah. So, are you talking about Balaji's network states when he's talking about, hey, the internet is going to form like countries and stuff like that?
Yeah. So for sure, exactly. Balaji is tackling it on day one from a physical perspective, getting physical real estate and having the network state incentive layer built into physical land, and then going digital from there. I'm thinking the opposite, starting digital and then moving physical. But yeah, we're definitely some similar ways that we're thinking about it.
Very cool. All right. So you mentioned previously, but before we start recording, that you have this thesis around RWAs, but specifically relating to like people playing video games and receiving RWAs as kind of like the loot or whatever. Instead of getting maybe they'll get like a sword in game, but also they get like a physical, an RWA, so a real world asset, which I guess they could redeem for a physical. And I think you mentioned gold as one of those. And I want to. That was a crazy idea. Can we talk about that?
Sure. Yeah, the idea was actually from one of my business partners who has been in media entertainment culture for decades and was the founder of the game studio that we acquired to Flashy. So has experience with viral games and Telegram games and gamification. And he's also now a principal of the largest gold tokenization ever. They're putting billions of dollars of gold on the blockchain, Canadian gold company. And his thesis was that there's lots of real world asset companies that have raised millions of dollars and been unable to create markets. So his thesis as the solution to creating markets for real world assets is viral games. And viral games have also raised lots of money and been able to create viral markets, but not been unable to create sticky engagement because the ecosystems are all built on a house of cards and people race to the door when the markets go down. So the solution to that is real world assets. Put gold or other real world assets. We're starting with gold because it's the easiest to understand and people grew up playing games and earning gold coins or GPE or whatever. So gold is the easiest, most viral, most is makes sense to start with. But ideally, the thesis works out, and we can do this with other real world assets to create markets for silver or for oil and gas or for other asset classes. But yeah, so we've got sponsored from this gold company an 8-figure chunk of their gold tokens. They're releasing to be seeded into games as an incentive layer for games for players to mine gold, basically. So yeah, the beginning of the digital gold rush. And I think I really like the idea of intersections of disruptive technology markets. So the intersection of real world assets in gaming solves the challenges of real world assets in gaming, or the intersection of DeFi and gaming. There's but yeah, the intersection of markets, I think, is where it's more exciting. And I think that the thesis of putting gold into games and gold into the internet to start a digital gold rush is exciting.
All right. So for example, I'm playing a video game. I kill a monster. I receive, a digital sword for the game, but also I can receive some of this RWA like gold token, which then I can keep for my character and go, trade it, whatever. Or I could redeem it for physical gold and have the gold like sent to my house.
Yeah. So to be specific, the in-game currency, the gold that you would pick up in games, needs to be a utility coin, needs to be redeemable for RWA coin, because the RWA, having it actually linked to gold or to equities or to whatever, makes it a security. You can't gift out as loot in games, but you can gift out a gift card, call it, or you could gift out gold assets that are redeemable for the real world asset coin if the person KYCs and checks, or that could be separately liquid, separately tradable as a derivative of gold, you could say, that would probably sell at a bit of a discount for people that don't want to KYC.
And you're not scared of DeFi yield farmers or like kind of the Axie Infinity yield farmers, because you're just going to have some sort of margin on that gold token. Like so it's like they can yield farm all they want because we'll still be making a margin off of each gold token produced or whatnot.
Yes, and we're looking to create a market. So this is the cost of for the gold company. Our objective is we actually are generating some revenue, but the objective is not monetization as the primary incentive. The objective is to bring millions of users that have demonstrated an interest in spending their time to earn real world assets to create the first user base, the first like millions of people that are going to be in the real world asset market, which we need, I think, across the board.
Wow, very cool. All right, Michael, this has been awesome, but it's time for the closing questions. All right. You have to tell portfolio companies that they have to build on one chain for the next 3 years. So you have to recommend one chain for the next 3 years, your portfolio companies. Which chain would that be?
Wow, 3 years. That is
Long time in blockchain.
Yeah, long time in blockchains. Today, I would say the blockchains that I'm most interested in, really like TON, because the Telegram 900 million people community, Kaya as well, same thesis with Line and Kakao. Abstract, I think, has a lot of growth opportunities, and there's a lot of gaps in that ecosystem now because it's newer. Same with Sui, I would say, for the crowd that is largely focused on just speed and throughput. To pick one would be challenging. Maybe Ton, because 900 million users. I think they're likely to stay the largest distribution network.
Love it. All right. What makes you pessimistic about the future of crypto? What makes you optimistic?
What makes me pessimistic on the future of crypto? Leverage on leverage on leverage in debts. What makes me optimistic? Everything.
So when you say leverage, you mean, I guess it's more of like a short-term bearishness because short-term as in like the next few years, not like, not 10 years out, but because some of these debts are raising more capital to buy more tokens through debt. And you're worried that could cascade if the prices go down.
I think it's the most likely way for the market this cycle to unravel, which I'm bullish on us having a longer cycle this time around than previous cycles. But yeah, I think DAT's unraveling on their leverage is the most likely reason that the market goes down this time.
Wait, okay, so the cycle, you said that this cycle could be longer than others. Can you elaborate?
Yeah, so I've been seeing a lot more about that recently, which is nice because previously I was thinking that it would be consistent with other ones, which would mean we end by the end of this year, market collapses beginning of next year, which would be a little bit of a shame because alt season has not happened yet, I think, whereas the alt run, whereas the where still is pretty institutionally driven. But yeah, I've been seeing more narrative being spoken about because monetary flows in previous cycles were every 4 years, that it happened to be a Bitcoin 4-year halving cycle as well, but it was just 4-year monetary flows, and the monetary flows is different number of years, with this one being 5 years. Other narratives being that because there's institutions involved now, that it's unlikely to collapse as much as fast, and that we push longer. But yeah, I have been wrong actually about there being super cycles and mainstream adoption the previous 2 times around. But eventually, in innovation curves, we should get to an S curve. So the whole beginning of if you zoom out long enough, the curve of adoption should be like that, right? And the first 15 years is just that until that's what it should look like, I think. So, are we getting to mainstream adoption now?
Hopefully. All right. How has being an entrepreneur changed you as a person?
Wow. Good question. Forces you to accept your faults or get better. Is really a mirror every day of your actions.
Awesome. All right. So is there a piece of content, whether it be like a book, a blog, movie, podcast, etc., that had a major impact on your life?
Think and Grow Rich, Napoleon Hill. who I realize actually might not have been the most honest man himself, but the principles I think are amazing. I read that as an 18-year-old just going to university, and yeah, it changed up my my perspective on life and how to think. Really,
What were some of the takeaways from that book?
big positive intention. Thoughts create your reality. Manifest, but do the work. Yeah, I think I read like The Secret and other books, a lot of secrets to success as well, that are a lot about manifestation, which I'm really passionate about. I've had some really incredible manifestations that seem impossible happen from effort, from consistent effort. But I think Think and Grow Rich really got the right amount of think and actually then do, because if you got to do the work.
Awesome. Amazing. All right, Michael.
Yeah. To shout out a couple others, if I can: A Man's Search for Meaning, Have Meaning in Your Life, and Dale Carnegie.
Amazing. Michael, this has been incredible. Where can people learn more about yourself?
Twitter at GDA. My website, mgord.me. Yeah.
Awesome. Thank you, sir.
Thanks, Andrew. This is fun.